Kenya Airways flights resumes as pilots call off strike. Fortunes in the mining sector. We take a look at potential in Kwale County. Chase Bank reopens. What lessons can customers learn? Well, a very good afternoon to you and welcome to KTN Business Today. As you've seen, those are some of the highlights and some of the stories we'll be following up for you this afternoon. Of course, being the 29th day of April 2016, we have a lot lined up for you this afternoon. We also have with us in studio the Managing Commissioner of the Kenya Meat Commission, who is with us, Joseph Laramo, who will be speaking to on the program as well. Also at our City Center studios, we'll be crossing over later to speak to Duncan Lumwamu, who will be weighing in on what has been happening in the banking sector, just to shed some light, as well as what we should expect. And we have businessman Simon Ngugi also with us this afternoon. We'll also be sharing experiences of businessmen when it comes to the banking sector. Well, let's begin with a look at our Twitter poll question for today. And we are asking you, what lessons have you learned from banks placed under receivership? I repeat that. What lessons have you learned from banks that have been put under receivership? That is our Twitter poll question for today. And we will be looking forward to getting your feedback on our social media platforms. You can tweet us at KTN News, at KTN Kenya, or my Twitter handle at Agina Abi. Just share with us your views, as well as you can vote on that Twitter poll question. Do keep us informed on what you feel about that. Well, let's start off with the latest story that a lot of Kenyans have been waiting to hear of. A meeting led by CS Infrastructure and Transport, the Attorney General and KQ management has finally cooled off striking pilots, and previously cancelled flights have resumed. This is after the Kenya Airline Pilots Association's demands saw heads rolling at the national carrier Kenya Airways. KTN's Joy Dorin Bira kicks off our program with that report.
Between midday and 5 p.m. on Thursday, hundreds of Kenya Airways passengers were stranded at Jomo Kenyatta, Moi and Kisumu airports after pilots went on strike demanding the resignation of the national carrier's top management, leading to flight cancellation throughout the evening.
Complaints from passengers because of slight delays, especially those people who had businesses to do in Nairobi. I think that was some slight disruption on the schedule.
After hours of deliberation with the Cabinet Subcommittee of Attorney General Githu Muigai and Transport Cabinet Secretary James Macharia, the pilots agreed to call off this strike late in the evening after it was agreed that some of the directors would exit the airline.
Some management changes have been effected immediately, and those conform with what this union can settle as a minimum. So I want to assure the country at large that our actions were based on the fact that we need to salvage the airline. And it was being the union that seems to have a bargaining power, we took it on ourselves that we will bargain for the 4,000 employees to have meaningful change so that this airline can prosper. Until we continue, until the end of our deliberations, which are set for June 1st, we shall crew every flight. The pilots shall extend every goodwill to make sure that they are not inconvenienced. We apologize for the inconveniences that have been caused to various people, and we assure you that this association, moving forward with the goodwill that has been shown by the management, will resolve all issues and we will not have to revert to this kind of action.
Joy Dorin Bira, KTN News.
Indeed, some relief that the strike has been called off. Close to 20 flights were cancelled yesterday, leaving a lot of passengers stranded. Of course, some good news that the flights have resumed. Of course, on the other hand, the airline might have to incur huge costs as of cancelled flights. We'll be keeping an eye on that story, how much it develops. Well, moving on, the Jaswanat Rai Business Group, a family-owned business, has actually confirmed being behind the buying of collapsed pan paper mills to the tune of 900 million shillings. Plans are underway to make a 6 billion investment at the plant, paving way for the revamp of the factory that closed operations back in 2009 in Webuye, Bungoma County.
Now in a position where we have signed the agreement with the bidder. The bidder and is Rai Group, and the bid is to actually to buy these assets and to run this factory as a paper mill, and not to speculate or to sell the land. This is a factory which is going to be resuscitated.
We will want to rehabilitate these. There are 4 lines in pen paper. We have undertaken at least within the next 4 months to rehabilitate at least 1 line we start with, and consequently we'll attempt on the 2nd, 3rd and 4th line in time. The challenge is because there is some equipment which has to be replaced, and those equipments, they are long delivery periods, up to 18 months, 20 months, things like boilers, because those are the challenges we are facing.
Well, developing story there around the pan paper mills, which the government has said that has been bought at about 7 billion shillings. Well, the Kenya Pipeline Company has defied a harsh economic environment to post a 4% jump in its pre-tax profits for the period ending December 2015. The profit uptick from 10.3 billion in 2014 to 10.7 billion shillings was mainly driven by increased efficiency and investments in upgrading its aging pipeline. The firm saw 6% surge in her revenues from 20.1 billion shillings to 21.4 billion shillings under the period in review. With the new CEO in place, Kenya Pipeline will now be keen on fast-tracking the acquisition of the Kenya Petroleum Refinery as it seeks to up its storage capacity. The company, whose core mandate is receiving, transporting and dispensing petroleum products through its 1,221-kilometer pipeline system, remains central in shaping the country's operational efficiencies and future plans. Well, the central bank governor, Dr. Patrick Njoroge, has asked banking institutions not to blame Islamic banking on their financial situations. The governor says Islamic banking has in no way and actually cannot in any way be the reason for some banks performing loans going to the levels they did. On the contrary, the added Islamic banking was transparent and free of manipulation.
Let's say magical about it. As a matter of fact, we call it Islamic banking, but one could even, for reasons that I think are obvious, but one could even say, or actually some say Sharia compliance and things like that, but one can actually say participatory investment. That's what it is about. So it is something that anybody should feel comfortable with, done correctly. It wasn't about that. It was about people who could not answer the question to the auditors and then tried to wiggle and hide behind a wall or hide behind a label which is this was an Islamic product.
Well, away from matters banking, let's talk matters to do with beer. Africa is set to be the fastest growing beer market in the world as the continent continues to experience rapid urbanization and a fast rising per capita income. While on a visit to East Africa Breweries Limited, Diageo President for Africa, John Okofe, notes that the revenues for beer manufacturers are looking up despite the proliferation of illicit brews in the market.
Opportunity in Africa is enormous, and it's driven by a number of factors. First of all, demographics is some very strong growth. About 130 million new consumers over the next decade will be coming into the legal drinking age. Secondly, there is urbanization, and as we see consumers move from a more rural setting to an urbanized setting, we see that consumers tend to enter the formal alcohol market. Thirdly, there's very low per capita consumption of alcohol across Africa. Some of the lowest in the world, typically about a quarter of that than in other markets. And then finally, in most markets, as is the case in Kenya, there's a very large illicit market as well. And as consumers get wealthier, we will anticipate that market moving into the more formal market. So for all of those reasons, Africa is forecast to be the fastest growing alcohol market in the world going forward over the next 5 to 10 years. So the opportunity is very significant, and Diageo is very well placed to access that opportunity. We play in both beer and spirits. Within beer, we play at all categories, from premium to mainstream to value. And similarly in spirits, we play at all price points. And so offering both beer and spirits gives us a real competitive advantage to win in what is the fastest growing alcohol market in the world. One of the big strategic pillars for us is to increase the amount of local raw materials that we use in a country. So if I take Africa, for example, over the last 3 to 4 years, we've gone from using about 50% of raw materials from Africa to 70%. In fact, in Kenya, that's now 75%. So 75% of all what we require to brew great quality beer is now coming out of Kenya. And of course, that's fantastic for a number of reasons. First of all, it's great for the local communities. And we're contracted with over 30,000 farmers to give us the sorghum that we need for our products. It's also good for the country in terms of increased tax take, and also it's good for our business in terms of being able to access local raw materials in the local market very close to our breweries. So that plays a key part of our supply chain moving forward. Innovation, we feel, is one of our competitive advantages in Diageo. We feel, whilst we can get better, we do think it's one of our core strengths. In fact, in any one year globally, we might launch as much as 200 products. And Kenya is no different. We are successfully innovating. This year alone, I think one of our more successful innovations is Tusker Gold that we just launched in Kenya, we're very excited about, supporting the Olympic team. Kenya Cane coconut flavour is another very successful launch that we've had. So innovation is really important for us to bring excitement and vibrancy to the category. And to bring new offerings, so to keep consumers interested. And it's also important that we innovate in the more value end of the segment to encourage consumers to move from illicit into the formal market, which we think is very good for the country as a whole and for ourselves as well. Yeah, so getting to our consumer, or route to consumer as we call it, is an important facet of our strategy. Making sure that we call on more outlets more frequently, that we set really good standards for our customers and working with our customers, our distributors and our partners, to work with our distributors in terms of their warehousing. So all of that is really important as to grow the infrastructure. We've been making some really strong inroads in Kenya on that. I mean, I guess more broadly, also, we've invested over $1 billion in the last 5 years, expanding our footprint across Africa, including upgrading our breweries, but also acquiring new markets. And so we are continually paying attention to our route to consumer and our route to market, and continue investing with our partners and our customers to make sure that the end offering for the consumer is one of the best in the world.
Indeed, that exclusive interview I had with the Diageo President for Africa, John Okpe, sharing some of the insights around the African market and saying the Africa story looks promising with demand for beer being on the rise. Well, let's talk now matters meat. The Kenya Meat Commission management is now blaming old machines in the country's largest slaughterhouse as the stumbling block to profitability, as it can no longer meet the market demand.
For more than 5 years now, the Kenya Meat Commission has struggled to keep up with the supply and demand of its product, a move that has left both farmers and customers of the country's only slaughterhouse in confusion. But according to the farm's managing commissioner, Joseph Liaramo, the machines being used at the factory are outdated, purchased in the 1950s.
The government is supporting KMC for this recovery system. You know, it's a turnaround whereby we are doing, and we have a strategic plan.
Liaramo insists that the machines and the analog technology being used at the processor has seen fewer number of animals slaughtered compared to the market, availability and demand. According to the external audit done by the factory, the modern machinery required to speed up operations and cut labor costs, as well as increase productivity and increase efficiency, could cost the commission upwards of 1.8 billion shillings. The government in this financial year injected 600 million shillings only to the factory.
The main part of the funds will go for modernization. And then it's sequential. We do it in phases because it's very expensive, which will be supported annually.
Leriamo was speaking during a signing of a memorandum of understanding with the Turkish government on a partnership to enhance and improve canned beef production, with the factory also in its final stages of workers' rationalization to cut down on costs. Philip Keitan, KTN Business.
Pertinent questions being raised there by Philip Kitani in that report around the Kenya Meat Commission. And joining us this afternoon is the Managing Commissioner for the Kenya Meat Commission, Joseph Leramo. Many thanks for joining us.
Thank you.
Pleasure to have you on this Friday on KTN Business Today. Of course, a lot of Kenyans have said that the Kenya Meat Commission has been ineffective. They haven't felt the impact of that commission in terms of assisting dairy farmers where they can be able to sell their dairy products. I don't know what you have to say about this.
Abby, thank you so much. And let me correct you, it's not dairy products, but beef products.
Yes, the beef products.
The factory was actually started and it was formed in 1950, 1st June, by an act of parliament, Cap 363, and it's mandated to purchase beef livestock, both large and small, so that it's slaughtered and meat is processed. And actually we handle meat products, that is byproducts, and the meat cuts, the primo cuts.
Yeah.
And we have both the local market and international market.
But the feeling is the commission hasn't been effective in assisting the beef farmers who are in the domestic market.
Actually, a machine has to run for some time, right? And the factory is 66 years old. And if a machine runs on daily basis for 66 years,
yeah,
it has to get worn out. But we have put initiatives in place. We have done a consultancy through Kenya School of Government.
Yes.
We have identified areas of the factory which have machinery which is outdated, and we are working out now through a turnaround plan to modernize the factory machinery. Doing it in phases because it's very expensive to overhaul the whole machinery. But we put a plan in place through a strategic plan whereby we have gotten a consultant from Turkey, and we also involved the Turkish embassy here in Nairobi.
Yes.
And they have an interest that in the area, in the canning line, they are interested because imagine we are outsourcing the cans from South Africa, and it's always been very difficult.
Yeah.
So if we can get a subsidiary factory that can do a can production within KMC, the companies cannot even sell it to KMC, but to the Kenyan manufacturers who are handling food, processed food.
And Mr. Leramo, looking at the beef sub-sector really, it has a lot of potential. Kenya is said to have some of the best breeds when it comes to beef products, but we are not seeing this translating into better revenues for beef farmers. And as much as we want to overhaul the factory and ensure that there is efficiency, what are some of the quick wins that in your office you would like to see done or you plan to do so that the farmers can benefit?
Thank you. The turnaround, Abby, is a component that has two main things. One, the modernization process that will overhaul the machinery. Secondly, we are also to do staff rationalization because actually the workforce, the wage bill is too huge. We may not maintain it all the time. And also...
how big are the costs in your staff's costs?
It's a bit huge, going up to 18, 16 million shillings a month. And that is what the factory cannot sustain. And we are a commercial entity, we are a commercial public operation. We are supposed to raise revenue. And in my time now, we have tried, we raised revenue, right? We were doing like 12 million.
Yes.
in a quarter, but we are now at 175 million in a quarter, and that is a tremendous improvement. So we are working more hard to plan, to rationalize, so that we can have a manageable wage bill. And then with the machineries, once we modernize in phases, we'll be able to slaughter a sustainable amount of animals, number of animals, so that you can work out a strategy to also tap the international market for meat exports, so that we can raise revenue and break even and make profit. Yes.
Mr. Leramo, how significant will this upgrade of the factory equipment be for KMC? How long is it likely to take? How much is it likely to cost?
This is a project that will take a period of 3 years. We are already kickstarting it this year. We have started it with technical audit, where an expert of abattoir factories will look into the machinery as a whole.
Yes.
Then identify the areas of weakness or the outdated machines, then we replace them. Some are a bit good, you know, because sometimes we say all this gold, all this gold. And the British old machineries are very nice.
Yeah.
That is how they have sustained the factory for 66 years. So we are working out to improve the machinery so that the efficiency, because we are handling like 300 to 400 large stock now, and 1,500 small stock. But once it's fully modernized in the 3 years phase, we are able to do like 1,000 large stock in a day.
Wow.
And about 3,000 small stock in a day. And that will translate, will make like a revenue between 950 to 1.1 million in a year. And we shall break even.
1.1 billion?
Yes.
Okay.
Yes. We shall break even and try to at least have run in a profit, because the cost now, when we do cost benefit analysis, we are not able at least to break even because of the frequent breakdown of the machinery. Yes.
Of course, that has been the old story around KMC, saying factory equipment, we have a bloated workforce. And what stands for Kenya to lose if this factory does not get an upgrade, as you have said? What do we stand to lose as a country, just to bring out the dire situation you are in?
Meat and meat products is essentially food, and Kenyans consume a lot of meat. And we go to countries like the UAE, particularly Dubai and the Qatar, those countries of the Middle East. The meat demands is too high because, you know, they don't have livestock.
Yeah.
And our meat products here at KMC and in the country is quality, because it's grass-fed livestock. They have quality meat, organic meat. So it's always, it has a lot of demand. So imagine raising a revenue between 1.1 billion to 1.2 billion in a year. It's tremendous. It's a source of livelihood, because we don't only intend to sell meat, we are also changing the life of the farmer from the ground.
Yeah.
Once the farmer is taken through a process, quality process of the production of this livestock for beef, you know, and the farmer is taught of means of the feedlot system, the quality of that farmer, of the livestock of the farmer will be better, and the farmer's economic empowerment will be realized.
Many thanks. As we wrap up, Mr. Leramo, what would be the legacy you'd like to leave at KMC? Because over the years, we've seen different managing commissioners coming and going, coming and going. I don't know, what will be the case for you?
Yes, it's good, Abby, that we have to start from one step, and starting from small beginnings, guided by the turnaround and the strategic plan. I'll hope at least by the end of the 3-year phase, the factory will function. It will operate in an optimum situation whereby we are geared towards making a profit. And once this machinery, because the problem has been machinery, the old outdated 66-year-old machinery is the problem. Once we overhaul this and rehabilitate the factory, we shall be able to break even and make profit and not essentially disturb the treasury, the Kenyan government to get funds. We are able to generate revenue and pay our staffs and buy quality stock to sell locally and internationally.
Okay.
Another essential component is the corn beef production. This is a profitable aspect of the of our programs, whereby we are mandated to produce corn beef to sell to our military. In fact, our great partners are the KDF, Kenya Defence Forces, whereby we and Kenya Wildlife Services, we produce a substantial amount of corn beef, and we feed our soldiers when they are even doing some works in Somalia.
Many thanks. Joseph Leramo there,
Thank
Managing
you.
Commissioner
Thank you so much,
for Kenya
Jabi.
Meat Commission.
Thank you so much.
Speaking to us about some of the great plans he has for KMC. Of course, KMC is the agency tasked with ensuring that Kenya is able to actually export some of the beef products as well as sell a substantial chunk in the domestic market. The company has been having a rough time. Let's see how it goes in the coming days. We're going to take a quick commercial break. When we come back, we'll be speaking to Simon Ngugi, a businessman, as well as Duncan Lumwamu on some of the lessons that people can pick out of the incidents that have happened in Kenya's banking sector, where we saw 3 banks being placed under receivership. Luckily, we did see Chase Bank being reopened. All that coming up after the break. Karibu sana. Just introduce yourself.
I'm Simon Ngugi Muigai, Managing Director for Fortcom Holding Limited.
Okay.
Yes.
Fantastic. Duncan. Okay, we start with the I&M, then here, or we balance? We will balance between, okay. Yeah. So, Ngugi, you'll face this way a bit. Oh, sorry. You will face that camera.
Oh, that camera.
Yes. Okay, okay. Just say your name and the company you represent.
Yeah, my name is Simon Ngugi Muigai, Managing Director for Fortcom Holding Limited.
Okay.
We are real estate practitioners.
Okay.
Yes.
Let's change your microphone.
Okay.
Ama? 1, 2, 1, 2. Just continue talking.
1, 2, 3,
Count
4,
1 to
5,
10.
6, 7, 8.
Kedi, unapata hiyo mic? Sasa.
Ile iko sawa na hii.
Hii ndo amesema sawa.
Yeah.
Yeah, just count 1 to 10.
1, 2, 6,
It's okay.
7. Yeah.
It's okay.
It's okay. Okay.
Welcome back. You're watching KTN Business Today. My name is Abi Agina, and we are now into the second part of the show, where we want to speak about some of the lessons that we can pick from the incidents that have happened in the banking sector. We did see Dubai Bank being placed under receivership, as well as Imperial Bank being placed under receivership. And the latest casualty was Chase Bank, which luckily has been revived and is now under the management of Kenya Commercial Bank of Kenya, KCB. Of course, a lot of lessons to pick, and let's now bring in our resident analyst who is joining us from our City Center studios, and that is none other than Duncan Lumwamu, who works with Sighted Investments. Good afternoon, Duncan. Good to see you. It's been a while.
Yeah, good afternoon, Abi.
Of course, we've seen Chase Bank reopen this week, the 27th of April. It's just 20 days since they were placed under receivership. I don't know, from your end, what are some of the expectations you had about this bank and how fast it would take for them to have it back and running?
Well, yeah, it's really more like a history being made in the Kenyan banking sector. We've seen the first bank to be placed under receivership, and actually it's come back and it's operational. So that's really good start to the regulator and all the concerned stakeholders who've been following it up and making sure that it happens. And even good kind of words to Kenya Commercial Bank coming in through to support them. But however, in terms of expectations, we all expected a much longer process. In as much as the recommendations we put out through were that we expect a very quick and speedy solutions towards solving the crisis, which we saw Central Bank together with other stakeholders coming in to actually achieve. So one of the key lessons we were getting out from this is whichever situation that befalls the banking sector, the speed and the timeliness of solving it will actually be the key factor to trying to boost confidence and trying to stop future problems with the market.
And Duncan, of course, this bank was having about 55,000 depositors who, I'm told, 97% had less than 1 million shillings in their accounts, whereas about 3% were the big depositors. And we were having an interview with KCB Group CEO Joshua Igara, and you're saying KCB had set aside 4 billion shillings when they opened the bank on the 27th. And out of the 4 billion kitty that they had set aside just for handling the withdrawals and all the transactions, about less than 1 billion shillings was withdrawn when the bank was open. What does this say about the confidence that the customers have in the bank?
I think, one, the confidence lies in how the whole stalemate was solved. Bringing in a player like KCB Group into the picture to solve it, it's already, you already bring in a lot of confidence into the market. KCB is known for its reputation as the leading bank in the country. And secondly, the regulator, together with the other stakeholders, were quick enough to come to the market and really reassure the depositors and all the other customers that at least there's a solution coming into play. And the fact that they quickly came in and said that depositors can actually access their money up to 1 million. Whoever is a depositor that in Chase Bank actually got that vote of confidence, or rather the push of confidence from the bank. So it's also a good stand that we didn't see a lot of bank run continuing from its reopening, which is also just showing that overall the banking sector in Kenya is maturing. Even the customers themselves, they're actually coming to look at issues fundamentally, and is the best step to take. So we just hope that in the future going forward, a lot of that will be encouraged, that proper communication channels, proper reassurances are actually brought into the market in terms of solving future crises.
Of course, Duncan, a lot of people were affected during this particular shutdown of the bank. I don't know, from where you sit, what are some of the key lessons that customers perhaps could learn out of this kind of incident that had happened to the bank?
Well, there are quite a number of things customers can actually learn from this. One, it's really important that you know your bank. And not just know your bank across the financial service, know your financial service provider. Understand them, understand the product offering they are giving you. Understand also who are the owners of the company, what's the level of corporate governance in the company, how are ethics, how is integrity held from the management, from the board level. And also try to understand the roles that are played differently by different market participants like KCB, Kenya Bankers Association, Capital Markets Authority. Remember, Chase Bank, for example, had already floated a bond, so it's already within the screening of Capital Markets Authority. So as a customer to the bank, it's really important to get to understand the bank. Of course, it will be difficult to trickle it down to the very lower level of the customer base. However, I think it's something which the banks need to really come out strongly and educate their customer base that it's important to know specific aspects of the banking sector. Secondly, what the customers also need to know around this is also trying to pull around risk. All the different customers, it's really important to develop a relationship with one bank, but also it's important to make sure you don't pull all your risks together. We saw quite a number of businesses suffering because their corporate accounts were in Chase Bank, their individual salary accounts for their staff were in Chase Bank. So not only did it affect the company, but even the staff themselves were affected, which could, had it maybe prolonged for another month or two, maybe companies could shut and we could see a number of people going home from unemployment. So ability to bring all that together into a market and being able to understand how the different functionings of the banking systems work is a good thing, not only to the investors themselves, but even the customers themselves.
Thank you very much, Duncan Lumwamu. Just giving us some tips about what lessons can customers learn. Of course, we want to quickly bring in also Simon Ngugi, who is with us also, just to quickly give us thoughts around some of the experiences of the business community. Simon, thank you for joining us. We are running out of time. Just make your comments quite brief. From a business point of view, what are some of the key aspects you have picked out of the incidents that have happened in the banking sector?
I think we in business, we are learning that it's not, like the analysts have said, we need not to put all our eggs in the same basket.
Yeah.
If you can separate the risk, probably where you're putting your fixed deposit, it should not be the transactional account that you are holding.
Yeah.
If you are holding a transaction with your clients, your suppliers, your employees, you need to actually know the bank, know how the bank is doing, and actually know the owners and actually analyze their performance before. If we have a dirty history, you know that the dirtiness can actually be transferred to your institution.
Yeah.
But what we should say is that besides the depositors learning, the institutions have also to learn, and also the professionals also have to learn, because we don't see why professionals like the banking society association,
yeah,
and the accountants associations, all these professional bodies are actually quiet. This is a time to punish those people who are actually involved.
And looking at this particular incident, I know you deal a lot with Forex as well as also in the real estate sector. What lessons can people with dollar accounts also pick out of this, if you can walk us through that?
Yeah, it's good to actually, it's just knowing the institution that you are dealing with and actually try to manage the risk. Once you know the institution that you are dealing with, then it's very easy to manage your risk as you proceed. Yeah.
Yeah. So finally, looking at the bigger picture, as a businessman, are you comfortable with the state of the banking sector, the health of the banking industry in the country?
I have confidence with the central bank and the way they have managed the whole issue. So I don't have full confidence with the small banks, but I'm happy that...
Why not? Why not full confidence?
Because there are so many things that are happening that are a bit shaky, like so easy way of accessing accessing loans. The loans are very cheap. It's very easy to access loans. Like now you can just do something in your phone and get a loan. That's an indicator that probably you might have non-performing loans. So that's very risky. You cannot get that from established banks. The small banks are actually very easily, loosely giving out the loans, which is very risky to the economy. But what the central bank is doing, I think, is something that will give us confidence, and we'll move on with business.
Many thanks.
Thank you very much.
We've been speaking there to none other than the gentleman who is Simon Gogi, a businessman, just giving us some insights into the issues around what you need to take care of when it comes to selecting a bank. Well, that wraps up KTN Business Today for this week, but we want to leave you with an interesting interview around ivory poaching. As you know, tomorrow it will be the big day where about 105 tons will be set ablaze by the presidents across the region in the fight against poaching. Joy Dorin Bira has an interesting interview coming up next.
Is after we have burnt all this much ivory tusks, what happens after that? Does this actually send the message that we're going to be more vigilant when it comes to poaching? Are we going to be more cautious? Are we going to have the law actually get to these poachers as is supposed to be? So Paul, what happens after the stockpile burning?
Yeah, now remember, conservation for us is a journey. And therefore, these are pieces as we go along, stages and phases that we are going through. So this ban will just be a statement to be able to fit into our conservation agenda and to say we are very committed to continuing showing and demonstrating and taking leadership in the conservation circles. Remember that in May there will be UNEA, the United Nations Environment Program that meets in Nairobi, and we will be discussing matters conservation, presenting the Kenyan's case and saying we want conservation to be in the world agenda and to be discussed. And remember, we also have September that we are working towards CITES. And again, these are steps. So the conservation agenda doesn't stop. It doesn't stop with this ban. We will continue talking about how best we can be able to conserve our wildlife. And that is the reason why we highlight these events, but they are part and parcel of an agenda for conservation for Kenya.
All right. Mr. Mbugua would now like to come into the issue of the Lusaka, agreement task force. When it was set out initially, what was it geared towards? What were the objectives, and how close have we gotten to achieving what it set out to do?
Looking at issues of poaching and trophy trafficking, one thing that is very clear is that those people participating in it, they actually knows the laws of the lands. They know the laws of Kenya, Uganda, Tanzania, and they can compare. They know where the shoe bites most. So they know you can commit an offense here and run across to the other country. Lusaka Agreement is a multilateral environmental agreement which was signed between several African states, including Kenya, Uganda, Tanzania, Congo, Zambia, Malawi, Zimbabwe, and maybe there could be others. I don't know them all. However, the main reason for Lusaka was to help in minimizing this trophy trafficking by ensuring that they have capacities and capabilities, and they have networks in all the countries that are members, so that if you commit an offense in one country and run to the other, you will actually be followed, because the same people from the country where you committed the offense and the places where you ran to, there are people who are actually going to get you in hot pursuit and get you. And of course, Lusaka Agreement Task Force have been working with the governments of the various countries. That's why the networking for them is very important. And largely, to a large extent, Lusaka Agreement has been very successful.
All right. Successful as has been. But let's now bring you back to wildlife population. Someone was saying that, if we're going to look at the year when we had 167,000 elephants and compare that to our population today, we wouldn't be able to accommodate. But how many elephants can we accommodate as a country, Mr. Gadhitu?
Now, you know, because of these species that have a lot of interest, iconic species like the rhino, the elephant, even the cats, you know, the lions and so on, we
Right.
actually do have national strategies for each of those species so that we are very clear and we are establishing what are the numbers that we have, what is the carrying capacity for the areas. So we are able to say what is the target over what time, and therefore what should be the recruitment level and what should be the defense mechanisms that we put in place. So for the case of elephants, we think with the human population increase and the land use that we have at the moment, that if we got to 50,000, that would be a good population to be able to work with. Now, wildlife is to a large extent, you know, in a way really pushed because the habitats are being converted, migratory and dispersal areas are being taken up, and yet humans can actually adapt. They can live in certain conditions even that are not suitable. So it's actually us, and that's the reason why the land policy becomes a very significant part of wildlife conservation going forward. And that's the reason that we've taken that estimate, looking at the land that would be available. And remember, the law is asking for expansion of conservation areas, not directly to be under government, but actually to be under private and community. And that's the reason that you've noticed that there are a lot of conservancies, community conservancies coming. That means that they are increasing the land under which wildlife can now be able to be accommodated.
All right. So we asked a question, how would you rate Kenya's fight against poaching? And we gave 4 options, which was very successful, fairly successful, and ineffective. Surprisingly, for the 2 hours that this Twitter poll question was out, 4% said that the efforts to fight poaching were very successful. That is 4%. And then those who thought it was successful are about 6%. Now, those who think that it has been fairly successful are 48%. That is the majority. And those who think that it has been ineffective are at 42%, which is a little bit worrying if this is the perception that Kenyans are having about the efforts that are being put in place to fight poaching. So what more do you think needs to be done? Because there have also been reports from different conservancies and also activists who say that, you know, there have been insiders as well who are collaborating with the poachers to kill these animals. So what do you have to say about that, Mr. Mbugua?
I think what needs to be done is perhaps those people who voted that it is ineffective. We need to let them know what we are doing. But when it comes to some aspects of security, it's not something you climb on rooftops and announce what you are doing. Because the people who are actually poaching, they're also listening. So if you go out and thump your chest and say we are doing A, B, C, D, these are our strategies, sometimes you will not succeed. However, looking at what we have done and what we have achieved, and looking at what Paul has said, that we have increased areas available to wildlife, for example. If you look at the national parks themselves, they account for approximately 45,000 square kilometers. And the conservancies, since we started having conservancies, we have approximately 33,000 square kilometers. The two combined bring the areas under wildlife to approximately 8 plus about 6. That comes to approximately 14%.
Right.
In all these facilities, be they conservancies or group ranches, we have trained game scouts. We have trained them as Kenya Wildlife Service, and they belong to the community. They are community members. So the communities are actually working with us to help defeat this. I talked about interagency collaboration. We are working with all arms of governments, be they the police, the GSU, of course that is still the police, the CID, the customs. We are working together, because if you run away, you commit an offense here, we sound an alert amongst ourselves, and the next moment that person is apprehended. And the courts have been supportive in in of course, applying the law as required.
Okay.
And quite a number of people have been jailed or have been fined, those heavy fines, and all these are contributing towards ensuring that we protect. But if you look at what I said earlier, that the other countries, the numbers of animals they are losing to poachers is actually rising,
right,
while ours is going down, that points to some success in our efforts.
Okay.
Perhaps we need to do more. I know we have not done everything that needs to be done, but we are trying our best.
Okay. Mr. Gaditu, you wanted to add something?
Yes, I wanted to just add something there to say that obviously when we make announcements and the government says that poaching has reduced by up to 60% in the last 2 years, and if we were to use the indicators, that is the rhino and the elephant, in 2014 we lost 64 elephants, and in 2015 we lost 164 in 2014 and 96 in 2015. The rhinos, we lost 35 in 2014 and we lost 11 in 2015. So you can see that it is declining. And therefore, if we are to use statistics to be able to establish whether or not we are successful, it speaks for itself. But also that we are seeing there is a lot of other systems that we've put in place which are helping to reduce this poaching. And therefore, if we are looking at the reduction of poaching, the volumes that we have been able to indicate that we are getting a lot of people who are going through the airport because we have put in the canine unit. So it's very easy and you can't corrupt that one.
All right.
It's very easy. And then there's Faisal Mohammed, who was arrested in Tanzania as a result of the collaboration, the regional collaboration. Again, he had done the crime in Kenya, gone to Tanzania, and yet we are able to get somebody like that, a kingpin of that nature.